Hey, welcome back. I'm Cecilia Mayer, and if you're buying or selling in the Denver Metro or even just thinking about it, you're going to want to stick with me for the next few minutes. The May 2026 market data just dropped from the Denver Metro Association of Realtors, and I've gone through every page so you don't have to. Today, I'm going to tell you exactly what the numbers mean for buyers, for sellers, and for anyone trying to figure out whether now is the right time to make a move. No hype, no spin, just the data and what it means in the real world. Let's get into it. First, let's run through the key stats from the DMAR report, which pulls data from REcolorado. That's the state's largest MLS and the most comprehensive source of real estate data in Colorado. The median close price was $615,000. That's up 2.24% from April and up 2.5% from May of last year. It's steady, not a spike, not a crash. The median days in MLS were 14 days overall, but here is where it gets interesting. Detached single-family homes are going under contract in just 11 days. Condos and attached homes are sitting at 29 days. Two very different markets under the same headline number. Active listings were 12,259. That's up 6.24% from April, but, and this matters, it's actually down nearly 10% from this time last year. So, yes, there's more inventory that we had in the spring frenzies of 2021 and 2022, but we're nowhere near a glut. New listings were 6,006, down 9.49% from April and down 17.47% year over year. That's a big drop. Sellers aren't rushing to list, and there's a very specific reason for that, which I'll get to in a minute. Months of inventory was 3.06 months overall for detached homes. That's 2.47 months. It's still a seller's market, but most definitions. For detached condos is 5.29 months, which leans closer to balance. Closed sales, we were at 4,004, down about 4% from April and down 7% from last year. Close to list price ratio was 99.30% overall, or 99.49% for detached homes. Sellers are still getting very close to their asking price when they price correctly. And mortgage rates, as of early June 2026, the 30-year fixed rate is sitting around 6.48% to 6.53% per Freddie Mac and band rate. The mid-sixes not moving much. Here is the thing I want you to really understand, because I think a lot of the coverage around Denver's market gets this wrong. Denver prices are not doing anything unusual. From 2017 to today, the median home price has grown from 382,000 to 615. That's approximately 6% per year, which is right in line with Denver's long-run historical average. We had a wild pandemic run up, and then we settled right back into that same long-term curve. The market isn't broken, but affordability is strained, and it almost entirely because of one thing: interest rates. Here is a comparison that puts it in real terms. In March 2020, if you bought at the 455 million price with 10% down at a 3.8% rate, your principal and interest payment was about $1,866 per month. If rate had stayed at 3.8% and prices had followed normal appreciation, that same payment today will be around $2,580. But at 6.5% on today's 615 million, that payment is 3,488 a month. That's an 87% increase in 6 years. And more than half of that increase comes from rates, not prices. So when people say Denver is unaffordable, they're not wrong, but the solution isn't waiting for some massive price correction. The data doesn't support that. The solution is rate strategy. So now let's talk about why new listings are down 17% from last year, because this is really important context. A huge percentage of homeowners in Denver are locked into mortgages from 2020 and 2021, when rates were 3% to 4%. If they sell and buy something else today, they're looking at a $1,500 to $2,000 higher monthly payment on a typical move-up purchase. That's not hypothetical. That's real check they have to write every single month. So they're staying put, they're renovating, or they're adding a bedroom. They're doing whatever they can to avoid giving up that low rate. And that's keeping inventory constrained. So for buyers, this means you're not going to see a flood of listings hit the market. The inventory reliefs everyone has been waiting for is slow rolling, and it may not come in the volume some people are expecting. So if you are a buyer right now, here's my honest take. Stop chasing a price drop. The DMAR report is clear. Denver's price trajectory isn't following its historical norm. A 40% correction isn't coming. And every month you wait is another month of rent you're paying towards someone else's equity. What you should be doing instead is first, get your pre approval dialed in, know your payment ceiling, not just your purchase price ceiling. Second, think about rate strategy. Seller paid rate buy downs are back on the table. Temporary buy downs, lender credits. These are real tools that can lower your payment without waiting for rates to drop on their own. Every 1% drop in your rate saves you about $315 a month on a 615,000 home. Third, consider the attached market. With nearly 5.3 months of inventory and a median days on market of 29 days, you have more leverage in the condo and townhome space. If your goal is to build equity and get into the market, this summit deserves a serious look. Fourth, be ready to move fast on the right home. Detached homes priced well are still going in about 11 days. You don't have time to sleep on a decision. If you want a customized game plan for buying in this market, I offer a free buyer consultation. The link is in the description, so let's map out your strategy. So, if you're thinking about selling, here is the honest take. You can still get a very strong price, but the days of throwing a home on the market with minimal prep and getting 10 offers over our asking price are gone. This market rewards preparation and realistic pricing. A few things that are making or breaking listings right now are the following. You gotta price accurately from day one. Overpriced homes are sitting. Buyers have access to the same data you do, and they know when something is priced wrong. Your property tax assessment is not your market value, so please don't use it as one. The presentation matters more than ever. Buyers are being selective. If your home needs work, they're not going to overlook it in the way they did in 2021. They're either moving on or they're asking for a concession. Invest in showing your home at its best before it hits the market. And the other one, concessions are back. Inspection requests, seller pay buy downs, closing cost credits. These are part of the negotiation landscape again. Going in prepared for this will save you from frustration and keep deals from falling apart. One specific thing to flag: if your home has a solar lease with an outstanding balance, this is a real friction point for buyers right now. So consider paying it off before or at closing if you can. New listings are down 17% year over year. That means if you're willing to list, you're facing less competition than you might think. But well-prepared sellers who price correctly are still achieving 99% plus of list price. So, not sure what your home is worth in today's market? I offer a free, no obligation home valuations. It's not an automated estimate, it's a real conversation based on your specific home and neighborhood. So, the link is in the description to request yours. A few things happening in Denver that are worth keeping in your radar. Colorado's unemployment rate held at 3.9% in May, well below the national average of 4.3%. A strong job market is a foundation for housing demand. and Denver's economy continues to attract workers and employers. Three Colorado quantum technology companies just received 300 million in combined federal funding, reinforcing the state's position as a growing tech hub. This kind of economic investment drives long-term housing demand. So on the cautionary side, foreclosure-related calls to Colorado Housing Connects are up nearly 50% from last year. This is telling us that some homeowners who bought up peak prices in 2021 and 2022 are feeling the pinch. It's not a crisis signal yet, but it's worth watching. And on the national level, Zillow filed an antitrust suit against Compass over private listing practices, a case that could reshape how homes are marketed in the future. I'll keep you posted as that develops. So that's Denver metro market in May 2026. Prices are steady, inventory is constrained, rates are in the mid sixes, and strategy matters more than timing. If this was helpful, please give this video a like and subscribe so you don't miss next month's update. And if you have questions about your specific situation, whether you're buying, selling, or just trying to figure out what your home is worth, drop a comment below or reach out directly. I'm Cecilia Mayer. Thanks for watching, and I'll see you next time.